everyone. Sloane here with another episode of the Free Money Podcast. I don't have enough good things to say about this episode, so I'll just tell you what we talked about. There's our usual dose of answering your questions, talking about all sorts of things regarding institutional investing. And then we chat with our guest, Kelly Grotke, who is a founder of Pattern Recognition, a research collective, and a PhD in history, who's done a lot of thinking about the institutional investment world, and particularly questions around divestment. As you might expect from us, we're not out here, harping on politics. The gist of our conversation starts off, helping folks understand divestments within an imaginative space. In other words, how this kind of broader conversation may be a window for folks into this world and help them understand the role that finance and investing plays in, building the kind of society that we want. We then talked about all sorts of chewy stuff, right? Like, there's a sociological question. How do you have a productive conversation about that? Who's doing it well? Who's doing it poorly? What are the differences between those objectives? And how do you, kind of confront the ideological aversions to even thinking about this kind of thing in institutional investment context? We close by sort of thinking about what victory ought to look like for folks who are engaged in these struggles. And spoiler alert, victory is going to look like continuing the fight. It's all of these things are long discussions, and there's going to be plenty more to follow, whatever happens today, tomorrow, and the next day. We then got to our regular discussion of hard things. We talked about some of the questions that you asked, and I got to stress, if you have a question for us, send an email to freemoneypod@gmail.com. Very easy. You can use any computer you want. It's amazing what they're doing with email these days. One of the questions we answered is, where are you on the topic of Orcas versus Yachts these days? And then we talk about garden tips, and I brag about my backyard wildlife pond quite a bit. We've changed up some stuff in the branding, so there's no pirate to read a disclaimer. I will do it instead, but I will not do the voice. We may discuss, and we do in fact in this episode discuss, securities that clients of Ethical Capital own at the moment. There is no investment advice in this podcast. Nothing is a solicitation. This is just us having fun, being dorks. Neither KDX, Ashby's firm, or Ethical Capital endorses any of these things. These are our individual opinions. We hope you have a nice rest of your day. Enjoy the podcast, and I would love to hear from you about things you'd like to hear us talk about in the future. Bye.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money.
Welcome to the Free Money Podcast. It's the show where we are more excited about institutional investing than anybody else you know.
We are. I have an admission to make, Sloane.
Confession time.
Oh yeah, right out of the gate. I was rooting for the North Koreans last night. They were playing the ping pong gold medal match because we're mid-Olympics. And that's the first time I've been rooting for North Korea, I think, in my life.
Yeah, I think that's a new phase for you. Is this, have you kind of gone full communist? Is this a political evolution?
I'm full underdog, and I'm wondering, if they lose in the gold medal match, what happens when they go home a little bit. But I was rooting for them. They were playing against, first of all, it's mixed doubles. It's a man and a woman. And they were playing against China. By the way, that's my only Trump impersonation, is how he says China. And I'm pretty good at it. China.
I see that.
Yeah, because my kids, they hear me say China walking around the house, and they're like, "Would you stop it?" Anyway.
It's like, I think my dad has dementia.
Exactly. I could. But I was watching the Olympics. I love the Olympics, and the China team is the two world number ones for men and women.
Oh,
and
wow.
The North Koreans came in as the bottom seed in the entire tournament. And they made it to the gold medal match. And they lost in 5 games, but they won a few of the games.
That's a Cinderella story.
It was going to be good. Yeah, it was going to be good.
that's what makes sports so good. It like is just like there's always this crazy upset where like the refugee team is whatever. I haven't been watching the Olympics at all. I've been like,
Oh my gosh, you got to get into it. The reason I end up watching China versus North Korea in the ping pong is because I am so mad at my news apps.
yeah,
They're ruining this Olympics for me because they announce things like who won the gymnastics. And so then I'm like, well, I know who won the gymnastics. I have no clue who won the North Korea China ping pong medal.
Yep. And that's what's so cool about the Olympics is like you get to remember that sports exist.
No doubt.
Everyone just figured out rowing is a thing.
It's true.
By
the way, I'm 47 years old. I'm going to the next Olympics. I just decided,
Hell
what I mean?
yeah.
It's too fun.
Yeah.
Looks awesome.
Yep. Yeah, just I mean, like you could be the Lance Armstrong of rowing and institutional.
Minus the drugs though, Sloane.
Oh yeah.
You know what I mean?
And the prostate cancer, hopefully.
I think it was testicular.
Okay. But yeah, and I think he's also, is Lance Armstrong problematic? Has he been canceled? I don't even know.
I don't know if he was. He should be canceled because he was the leader of the doping movement when I thought I was going to be a professional cyclist. Because I was literally, I'm not sure if you knew this about me, Sloane, but I was racing bicycles in Europe between 2002 and 2004 with like the dream. I was trying to go for the dream. But
Wow,
I didn't take any drugs.
Wow, that's always what holds you back, my friend.
I know. I know. You got to be on the drugs.
Yeah,
apparently.
it's like if you want to if you want to make it in this world, you got to be doping.
Sadly, I think that might be true, but I hope it's not for my children's sake.
It's definitely a little bit scary to think about. Like, having gotten to a level of like competitive skiing, like it gets very fast to a point where it's just like, are you down to take crazy risks with your body? And do whatever the heck you need to do. And I just
have we done a pod since I had surgery on my ankle after a skiing accident?
We haven't. No, we didn't. We both got really sick and messed up for several months.
Yeah. It's almost like we took an what do they call it? Injury reserve, or we got put on the injury list for the pod because I had surgery on my ankle, Sloane, because I had a huge wipeout skiing at the Palisades. Luckily, I skied down to the bottom. I didn't need that sled because that would have been emotionally traumatic to get sledded down.
I've only had that happen once, and it's like not a good vibe.
No. I know that we got a guest coming soon, but I do have cool news, Sloane. I know that we have a format for this podcast that I have not forgotten.
We would be in a fight if you didn't have cool news. I mean,
Perfect. Oh my God, you're going to love this one. Okay. This one is a research study about what happens when you give people free money.
Oh,
have you seen this?
I seen it myself. Yeah.
Okay, so Open Research, which used to be called Y Combinator Research, ran this big study on literally free money. And the idea was they would take 3,000 people, give them monthly cash transfers, no strings, zero strings attached. Some of them received up to $1,000 a month, no strings, for 3 years. And then they've gone through and they've seen, what do people do with these cash transfers? Is it good for society to do it? Is it not? And I've been tracking some of this research for a long time because the Alaska Permanent Fund facilitates cash transfers. And in Africa, people have thought about this a lot. Should we just do cash transfers? Anyway, I'll just share with some of the findings of this because I think it's fascinating.
It's so chewy. It's
good. It's delish. First of all, the part that I think is a little bit sad is it didn't have an effect on health. So a lot of us would have thought, oh gosh, people are going to end up in better health. They're going to eat better. They're not going to eat at McDonald's. Sorry, McDonald's. But they're going to stop eating at McDonald's. They're going to start eating healthier. Had really no appreciable effect on health. But the good news is it also didn't increase spending on drugs and alcohol. Mm-hmm. So some of us might have thought, oh gosh, you give people that have an addiction money, they're just going to spend it on drugs and alcohol. Didn't happen. What they spend it on is fun to think about, though. They spend it on rent. So they move into places that feel more secure. They spend it on food, so that was right, but they improve their diet. And mostly they spend it on friends and family.
Weird.
Yeah. Isn't that amazing?
That's
They
like
get,
so.
they're getting $1,000, and instead of just spending it on themselves, they turn around, and the most significant factor, according to the data, is an increased spending on friends and family.
That is so interesting, and I haven't really heard that discussed much. The big finding from this study that's been getting a lot of press in like my inbox is like that there was an effect on their relationship to the labor market.
Yeah.
Where like
That's another negative.
yeah, like where
They don't
which
work
is,
quite as hard. Right.
which is it like? I mean, is that really a negative? That
I don't
like,
know.
it,
Yeah,
it,
that's
it, you
it's
know,
pitched as a negative. It's positioned in the news media, the fake news.
Yeah, it's an interesting lens into like how the investment or how the economic world sees like making the world a better place, right? Because like
Yeah.
the it's the fact that somebody has more money to spend with friends and family and less economic stress, would seem to be good. But like I saw a lot of people on Twitter, which I've been back on. It's a confession.
You're back on.
I I
Okay. All right. Well,
Yep.
I'm still sort of not back on it, I have to admit. I just find the boss such a
Oh,
a-hole.
he's such a dweeb. I mean, it, like in new and exciting ways every week.
I know.
Like, this thing with his trans daughter was just like so.
It was outrageous, dude.
I mean, like I got asked for comment on it, and I was just like, "Look, this guy has destroyed so much shareholder value. He has literally killed people. And like
the self-driving doesn't self-drive.
yeah, and like I mean, my favorite Elon is a bad manager story is that like his factories have these crazy worker safety records because he doesn't like the color orange.
What an idiot.
I mean, and probably other things, but like he does the safety tape that should be there at a factory is not there because he just doesn't like the color.
Yeah.
But yeah, like that I
You're
was
back on the
hoping-
Twitter is what we were talking
back
about.
on the
Sorry.
Twitter.
Yeah.
Yeah.
Okay.
back on the Twitter, such as it is, and yeah, I mean, it's not good anymore, but nothing is, and so
Maybe I'll come back. Now that you're back, I'll go back. All right,
Hell
two more
yeah.
bits of news before we get to our remarkably awesome guest. And this is not premeditated. You know me, Sloane. I'm not planning
Yeah,
things.
you're just.
But I have two stories on China.
China!
The first story is Temasek's. It was not a real announcement, which is like kind of fun because the head of the North American office, I guess, was talking about the challenges of redeploying $30 billion of dollars that was going to come from Temasek's China exposure that they're moving to the USA, which adds a bit of intrigue, right? Because it was like maybe that slipped out. So they're moving money to the US out of China in part because of the growing, controversy between those two countries.
Yep.
And I'll mix this story with the second story just to be respectful to our guest and say that Saudi Arabia and Abu Dhabi, like in the same week of news, announced that they're doing the opposite move.
Interesting.
They're taking advantage of the West's pullback from China and all the consequences, which would include Temasek shifting money, and they're going more aggressively into China, in part because they're looking to diversify their economies out of fossil fuels and into tech.
Yep.
And one place where you can go and get a toehold in tech right now, lower valuations, great companies, at least in the sense that they have huge user bases, is in China.
It's interesting. Yeah. Like, I mean, for the longest time, China has been just not a feature in the portfolios we manage. But like 3 months ago, I was suddenly like, you know what? I could see us maybe kind of sort of buying some of these companies.
Interesting.
Like there was a story I saw at a panel where somebody was talking about a real estate investment trust transaction where I think it's like senior living facilities maybe, but anyway, like the Chinese platform that this person was talking about is 4 times the size of the biggest US competitor, trading at like something like a third of the valuation.
Interesting.
With like actual cash flow, actual reality, and ethical issues abound. I don't speak Chinese, etc. But
Mm.
like it's it's a really interesting space. There's going to be a lot of news on this subject, I would guess.
Do you need to speak languages anymore, Sloan?
I
I feel
mean,
like it's nuts what the Chat GPT / whatever Gemini
yep.
is doing. Like, do you know that I don't use what is the one that you practice your language on? I had an
Oh,
account.
Duolingo.
Duolingo. I stopped doing the Duolingo. Here's what I did. I created my Chat GPT account in French, and I'm just talking to this French lady all day long now. And it's
Huh.
amazing. For those of us that like pretend that we're almost bilingual, because I lived in France for 3 years and I'm technically a Canadian, Duolingo doesn't quite get there.
Mm-hmm.
It just doesn't quite
It's sort
get
of
to that level.
it's a game. I mean, we own the stock, but
Oh.
it's a we own less of it than we used to, and it's basically like an entertainment platform, I think.
It's fun, yeah. But it's getting you to functional. It's not getting you to like bilingual.
Exactly.
Anyway,
Yeah.
The China piece is interesting, and then we'll come to our guest. But I would just say, like, they're doing a lot in sustainability and clean tech, and we got BYD buses driving around Stanford. So
yeah, it is with everything, many things can be true at once, right? And like
True.
it is like this massive experiment in state intervention. But they're also adding more clean energy capacity every year than anyone else. Here's a crazy China stat. I found out that the plastics they import every year have the same emissions impact as the country of Germany.
Interesting.
So like in terms of like chewy things to think about, I mean, come on. How are you going to be a global investor and not think about it?
Here's a possible segue. Okay. And I'm not talking about the Segway scooter thing. Although that's a segue too. My segways are the worst. Let's just I'm just talking about Segway scooters all of a sudden. I'm picturing that guy who kind of fell down on his Segway and died. Very tragic.
I think the inventor died on a Segway.
I think he did. Sorry, this got dark. But the other story I was going to say on the China is a lot of the U.S. Treasurers are now stepping in again and pushing for divestment, like outright divestment, and that could be a segue to our.
It could be some kind of segue to this topic, this conversation about divestment that we're about to jump into. Gosh. And our guest is a perfect person to guide us through it. Her name is Kelly Grotke. She is a PhD in history. And also does some work at UCL and runs a research collective called Pattern Recognition Research. Welcome to the Free Money Podcast, Kelly.
Amazing.
Thank you both for having me.
Thank you, Kelly. Thank you for coping with us and subjecting yourself to this undignified experience that we have to offer for you.
With pleasure.
I feel like a little bit nervous, Sloane, because this is the first time we've let a guest actually witness the ridiculousness up front. Normally we invite the guests in after we've been crazy and then we put on serious faces.
I mean, I think that, for better or worse, my serious face is just not, I just don't have it anymore. But Kelly, I'm hoping that you can kind of divestment's obviously a controversial topic, right? There have been picket lines, encampments, whatever. Help us get past that controversy for a second and just think about the possibility space of investing, right? And this thing that we're all trying to do of building good portfolios for the long term. How can we see this conversation as an invitation to consider that broader universe?
Yeah, I think it's an excellent opportunity. I've been looking at endowments for years. And from a variety of perspectives, sustainability and all of those kinds of things. And then when divestment started to come up, people came to me for, information on what was going on in endowments. And I think finance these days, I think for the vast majority of people, is something that's very, very abstract. It affects all of our lives, but very few outside of its practitioners really understand how it works, and so I'd already been working on trying to get people to understand the nature of endowments, particularly private funds, because many endowments are heavily invested in those. And so divestment, I think, offers an excellent opportunity to advance the general education about the, finance and the private fund industry in particular, and give people a chance to maybe learn a bit about how that world operates. And so I think that, whatever one's political positions are on the underlying issue with divestment, I think it nevertheless offers a really, really good and valuable opportunity for a greater understanding of the role of finance in society.
Yeah, I just had a client earlier today ask me a question about pensions, which I know is going to make Ashby's heart grow 10 sizes.
True.
Yeah, I mean, I think, people who are a bit more experienced than me have been comparing this moment to kind of the South African experience where, you sort of had thinking about investing become interesting for younger people for the first time in a big way all of a sudden. Is that the kind of thing that you're talking about? Just kind of like sparking that interest and getting people.
Oh yeah, yeah, and I mean, there are political angles that extend, I think, beyond the explicit political challenges that you confront with divestment. I mean, there's the incredible power of the private fund industry. There's the resistance to regulation. Also, if you compare it to divestment from South Africa, that was generally speaking, I think, a time when that started in the 70s, a very different environment for investing, particularly
Mhm.
universities. They were much more conservative. That was before the big push into private funds, which happened in a lot of private universities following the Yale model, as you know.
Right.
There's a concept in the history of philosophy I kind of like to use, I think, to maybe promote the discussion and maybe cool down some of the most heated emotions. It's the notion of like the epoche, the bracket. So let's just bracket the notion of like what is particularly at issue, and then use this as an opportunity to learn about all a range of things about how investments work, about how they have ethical or moral issues. This is already happening, I think, with environmental concerns. So there's an opportunity for people to look at what's going on with the divestment debates and learn from that in terms of strategies for decarbonization or getting divestment from fossil fuels. So it's a learning opportunity.
Absolutely. And go ahead, Ash.
Well, I was just going to say it does feel like an interesting moment where if you kind of pursued the classic economic theory, you would think that divestment would have gone away as a tool. This was like what people were pushing. Oh, it doesn't change cost of capital, these kinds of things. And yet you're seeing both sides of the aisle in the US pushing for divestment of different things for different reasons. You're seeing divestment, at least at the single stock level, being pursued as a strategy by Norway's sovereign wealth fund, the naming and shaming of companies, and using that to drive, call it, an ethical agenda around the world. And so it does feel like this moment right now is back where actually people see divestment as like an interest. It's almost like an extension of proxy voting. It's like an alternative where, instead of proxy voting, we're doing a big divestment and we're talking to the press about why we're doing it. How do you like manage this process and build a conversation around divestment to have it end in like the goals that you have?
Let's see. It depends
Where
on
do I start?
Maybe I just asked the biggest, hardest question on earth and I didn't realize. So I apologize.
Yeah, solve it for us, Kelly.
No. I mean, I've worked with a bunch of student groups, faculty. I've talked with trustees, and so of course the conversations kind of vary depending on who you're talking with. But I think that one of the things that's brought out that you can kind of separate from the actual possibility of divesting or not is the response to demands for divestment, which varied across campuses very widely. So is it a good idea to bring cops in to clear students? I would say no. And I would say, Sloane and I had talked about this before. What grade would they get? Well, that would get me in, they would be an F. There's no reason to do this. So when you look at the systems of power that are kind of coming into play, I think this also makes it very interesting. And one of the arguments that I've made before is that because endowments are often heavily invested in private funds, they kind of end up serving proxies, whether unwitting or not, for the private funds. So they are kind of gatekeepers. They're maintaining the same level of secrecy. They're often contractually obligated to do so. So what I've argued is that the forms of governance, like at universities and things, have tended to become more autocratic and the more that they get financialized. And I think there are people in these contexts who really want to have good and open conversations about it. But when you see like over the top responses, like we have in some Colombia, most famously perhaps, there's something wrong. There's an exclusion of people who are stakeholders. And I do think it's possible to have good open conversations about this. But there's also an ideological barrier that I find often enters in when you're talking with people who may or may not tend towards a bit of libertarianism. So that everything is excluded. Moral considerations are off the table completely because, and you see this in university responses too, they mimic it. And I think that's a real lost opportunity. That's just an assertion of the status quo. That's the only thing for the long-term health of a nonprofit. So the line goes is fiduciary responsibility. Now, fiduciary responsibility is important, right? It's, you don't want to just throw everything out the window. But I think, long-term growth and health of an institution also has to do with the character of the institution. It's not just an assertion of financial prerogatives, uber alles, right? As if there's nothing else to be discussed. I mean, what are students going to universities for, right? To learn things, to have discussions, to engage in difficult issues. So this kind of puts me to the side of all the ridiculous culture war stuff, because I don't think that's a really good way of thinking about institutions of education, for one. It's deeply ideological. And, what's conditioning a lot of that also seems to be some of these issues that are floating around the issue of divestment. And what we can talk about, what we can't, how we talk about it, how broadly we investigate, and how much we are able to learn. Because I think there's a lot of learning to do. And that's not just for people in college. That's like I'm still learning stuff. So,
I mean, yeah, I never learn anything, but I think like when we issued our guidance on divestment to chief investment officers earlier this year, like that was exactly what we were saying. It was like, look, this is, you have a constituency that is not going to go away, and like a need to find a way to navigate this moral material boundary, in how you're investing. And if you're a chief investment officer, God bless you if you're ignoring it. I mean, like, good luck. These guys have to make funding commitments where they might not cut checks for years, and they're going to have like, their ability to operate constrained by this contentious relationship, which, they could very easily instead turn into a source of insight. Right. And they're going to have to be paying attention to this. I wonder, like, can you give us an example of an institution that's done a good job responding to the divestment, back and forth?
Yeah, I mean, a lot of the institutions that got a lot of attention were obviously handling it bad. I mean, negative, it's like if it bleeds, it leads.
Yep.
Right. So that was unfortunate in a lot of ways because a lot of institutions all over the country had these and they weren't dispersed violently. And I'm not familiar with each and every case, but there are two, one local to me, Wesleyan in Middletown in Connecticut, seems to have handled it well. They had an encampment. I'm nearby, so I saw the encampment. They allowed the students to stay. They negotiated with the students about, any disruptions to commencement and all that stuff, and it was fine. I'm not sure where the status of things stand with the student demands for divestment, but at least, they were able to be seen as stakeholders, and to have their free speech. Another place, which I know better, it's my alma mater, is Oberlin. And I think that so far, they've handled it pretty well. And I think that there's there's a proposal pending, and it may be one of the first in the country, that's being evaluated by the trustees. So that's a step further than a lot of places have gotten, and hopefully we don't know the results of that yet, but hopefully there'll be a substantive response either way, whether the decision is to divest, to partially divest, or not to divest at all. But there was no violence there. They were, it was peaceful learning encampment. Even the trustees and the admin were mostly, it wasn't 100%, but they were mostly willing to kind of consider students as stakeholders. And, we have yet to see the results of that. But that's very promising. On the other end, you have places that refuse to talk about divestment at all, right? Off the table, no discussion. And again, a real lost opportunity as educators, if that's what you think a university primarily is these days. That's a totally lost opportunity. And then you had people or institutions who are kind of in the middle, who said, okay, we'll divest from publicly held securities. And in most of the cases, that's just going to be a small fraction. And so good, fine, that's something. But again, I would say there's a bit of a lost opportunity because the investment world isn't really illuminated by that. And most people thought there was more of a success in those cases than there really was because of all the holdings in private funds, which would not be included in that.
Yep. Yeah. And it seems like, I think this is a very Ashby vein of thinking, but there's this endowments are used to running for the benefit of the donors, right? The donors are sort of seen as and obviously the institution, but the donors are sort of usually seen as the core stakeholder, right? And it's we've got to bring in this new group, and figure out how to navigate that operationally.
Yeah, I think with a lot of the bigger, more prestigious, Ivy League stuff, that's a much bigger factor than it may be for smaller places or for state colleges and universities. But yeah, it's a serious problem. Universities and colleges need donors. They need endowments. There's become an ever more dependence, and then this is the rationale for yield chasing with stuff like private funds, right? Is that the endowments become an essential part of managing a college or university right now. And so, yeah, there's political challenges there. I sometimes wish that everybody would just sit back, take a break, and take a deep breath and be willing to have a conversation and not just assert a will or an ultimatum. When I think of students today, this world is going to be much more theirs than it is mine. They have to live in it longer, in all likelihood, right? So I think they're very important stakeholders in this conversation. And I think that not treating them as such is kind of infantilizing. And I also get, because I know American education system is so expensive, it's so high pressure, there's all these aspects which can potentially interfere with education, And I talk with students, and some of them, this is a very big change from when I was, in college in the 80s and 90s. Some of them just basically think, okay, I'm just going to have to slot myself in, try to make a good salary, and that's all that life has to offer, except for maybe a vacation every now and then. Now, the reason this is bad politically is it's kind of a constriction of hope. So I think with the donors, I would say, think of the next generation, right? Think of who these people are becoming and what these struggles are helping them to learn, and prioritize that. Don't come down on them like a ton of bricks, but be willing to listen instead of assert prerogatives, because that's not maybe it's just me these days, but I don't think authoritarianism is a good model for society. So,
part of the model for society, I think for me has always been transparency, and my challenge with the endowments is often their lack of transparency. And
Absolutely.
My fear about the current moment is it really plays into the hands of people that would say, hey, we need to keep the portfolios and the fees and costs and all this stuff incredibly secretive. Otherwise, you become a target. Like most of these students couldn't actually tell you what was in the endowment portfolios. And I think this moment in time, rather than actually sparking a movement towards transparency, like I expect it will entrench the lack of transparency in organizations that I've wanted to get transparent about for a long time.
Yeah. Yeah,
So
no, I agree with you. I think that's a very real danger. And that was already kind of being endangered by Gensler's even minimal attempts to regulate, say, the private fund industry, right?
yeah,
I mean, it was already, all the forces were already gearing up, right?
it's
And
true.
what's good for that industry may not be good for society as a whole. I mean, I sometimes think of this in terms of, because of my training, I think about it in terms of history, right? And there are clear instances of financialized forms of economic and social organization that we now think are horrible.
Yeah.
Slavery, for example, so the status quo, I think if you remove a little bit of that, wiggle room or that play in the joints, then that bothers me too. And you probably know that the tendencies in that world much better than I do. I'm on the side of the students. I would like greater transparency. I've been advocating for this for years at Oberlin. I've increased my understanding of the barriers to it. But yeah, that's a real danger, and I think that anybody who's engaged in the issue of divestment should know that too, and go into it with an awareness of that. If it happens that there's no transparency, then I don't know. I mean, that to me, that seems that it would be kind of a bleak outcome. But it's
Well, it can't get much. I mean, look, I don't think it can get much worse than it's been. Like when I first
yeah,
started studying sovereign wealth funds, I remember looking at the Iranian sovereign wealth fund website, and then just as out of curiosity, went to my alma mater, Princeton's website, and saw an email address with a basic web page that looked like it had been created in geosites. Now, this was about 15 years ago, but there was like no transparency. Like the Iranian
no,
sovereign fund had more transparency than Princeton's
yeah,
endowment at the time. And
yeah,
it's always rubbed me the wrong way that like these endowments are minting billionaires around the world. They're the engine of the alternative investment ecosystem. And I'm okay if you make the case to me that this is net good for the university, net good for society, that it's driving high performance. But how do we actually sit down and think about it in a rational way and actually study it if we don't have the data?
absolutely. I mean, it's kind of a question of who manages the managers.
Mhm.
And I think administrations and trustees, those who are inclined, because I do think it's a plural universe out there. I don't, those who are inclined could be important mediators in that. But I'm
Yeah.
not even convinced that a lot of people in university administrations know how this stuff works. I
I'm not
mean,
convinced the heads of endowments
Yeah.
know
yeah,
how much they're paying in
we're
fees.
taking steps here. Yes. Yeah.
Like I have heard from endowment heads, I don't want to know because it would actually change the way I manage my capital.
Wow.
And I know that
Yeah.
I can generate performance doing this. So I don't want to know the carry I'm paying to hedge funds or private equity, or I don't want to know, exactly all of these statistics between net and gross return, because then I'd actually have to justify it.
Yeah.
And that gets scary. And I think that is linked to this divestment movement where it's like, well, look, I know how to make money for the university. By the way, these endowments are so central to the American university model. Harvard's endowment is 400 years old. Some would say that Harvard is an endowment first and a university second.
Yes. Yeah.
So they're so central. They need to make money. They're all integrated. And there's a sense that like, just let us do what we know how to do, stay out of our way. So anyway.
Yeah. I mean, it's interesting because, I'm I have a lot of concerns about a kind of naturalizing tendency when it comes to finance and economy. Just having a longer perspective from history, even though economic history is not particularly my area. But, I think when you look at the colonial companies, the East India Company and so on, that were absolutely dominant and have really shaped the world we live in still today. That model, and it's only been in the last, maybe a few decades, has come under a lot of criticism by historians. So it would be sad, though, if the best we can hope for at this moment is that, 200 years from now, historians will look back on this and say, oh, wow, this was a rapacious industry and it was doing all these kinds of things. And it'll be great because everybody can say, oh, that was bad, right? But, I was kind of raised on classics of Western political thought, right? And a lot of those, up until the 19th century anyways, didn't really talk about these kinds of issues, about finance and about economy, right? They were talking about governmental forms and, rights of citizens, or even having a notion of citizen with any participatory rights at all, whether they were premised on property or whatever. And so I think to counter the thing, like maybe we will have an environment of more secrecy in reaction to the protest because people don't want the trouble. But maybe also we can finally, at least in the Western political tradition, integrate more of an understanding of finance and economy with, governance and public administration. I mean, it could happen, but it will need a base of people to push for that. It won't happen voicelessly. But I'd much prefer that than having historians 200 years from now look at the situation and go, oh my God, this was a mess. And these people had way more control. And it really excluded a lot of people from very important conversations. And especially so given climate change, right? I mean, we're confronting that globally. It's not going to happen on sovereign borders,
Yeah, I mean,
On the Martian Harvard campus, right? That's where we're studying this. Sorry, 200 years from now.
I mean, there has to be room for idealism, right? I mean, there's got to you got to put it somewhere.
Yep.
Yeah, absolutely. And there's a meme on this podcast that if you want to get fired at a pension or an endowment, all you have to do is innovate.
Yeah.
And I think there's this there's all these entrenched kind of quasi-religious beliefs that folks have that they're if you impede on the capital allocation process in any way, you harm it irretrievably. And I think what we're talking about is the integration of new factors, right, which is at the core of innovation. How can you, if you're dealing with someone who's ideologically committed, right? How can you be a good neighbor and guide them along? Do you just sort of give them signposts? Do you sort of illustrate risks? I imagine in your engagements you've been involved in some of this stuff, and I wonder how do you what's that posture have to be like, and how does it change you as the activist in engaging to know that you're dealing with this kind of ideology?
Yeah, I mean, I suppose the first step is familiarizing yourself with the landscape. And I think the divestment differences between South Africa and now are substantial enough that there's a definite learning curve there. But so, okay, let's say you reach that and you understand the private funds, you understand the lack of regulation, you understand the secrecy and all of those kinds of things. So what would be the next step? How do you gauge any success? Well, with the divestment from South Africa, it was a very long-term effort. And I would really underscore the element of time here, because we're talking about something that, got going in the 70s and, basically was concluded in the 90s, right? So you're talking about sort of class generational continuities of struggle, right? Which I think is would be essential. And I think that instead of seeing like, although I agree that South Africa is a good model and it's an inspiration for a lot of people, because it's also, you want to feel politically that you can engage in moral action, right?
Mm-hmm.
Obviously, there's a real appetite for this, something that's abstract but seems achievable enough that it shapes your concrete actions and goals in the near term. It's a hard process, but I have seen more organization around this, and just because of, the destruction caused by Gaza. I mean, this could have happened, to be honest, during the wars in Afghanistan and Iraq, right? I mean, if you want a real anti-war movement, and you want to know that your universities aren't profiting off of military-industrial complex, well, there was plenty of material to work with. That said, it's not really a tu quoque thing. You don't get to like sidestep the moral issues by saying that, like this, by saying that, well, you do this too, or it's a different thing. You don't get to sidestep the moral issue. You have to still confront it if you're being honest. So yes, it could have happened before, but it's happening now. And we'll see. I think it's really too early to tell what might come of this yet. I mean, the summer kind of disrupted the continuity of the protests and stuff. But I imagine this is going to keep going and hopefully spark larger conversations like we were talking about earlier, but also, more broadly about what kind of world do we want to live in? Where do the profits come from? How do we understand these things? And what can we do about it? There are plenty of people happy with the status quo, especially those who profit from it. But in an environment of clearly an increasing inequality, again, I think these are important issues to point out, and it goes beyond the issue of divestment. Just so. If I were an activist in this context, I would be very happy with incremental success. Anybody I reached in a university administration or anybody in finance that was willing to sit down and have a discussion about the way things work. Because again, I don't think a lot of people really understand that as well as we could. I mean, you talk about securities valuation and people think that like you assign a number to, something in private equity or hedge funds and it's like real, like in your checkbook. That's once you assign number to something, it attains a kind of positivity, right? So, but that's not the case at all with finance, so there's a whole bunch of learning to do on a lot of these issues. And so, yes, I mean, the goal for the people, the students protesting for divestment would be divestment, right? But, it's like Miles Horton said, you're kind of in for the long haul, so you have to make strategies for the long haul, because the civil rights movement didn't happen overnight either. So,
I mean, just like investing itself, you got to be in it for the long haul. You got to make strategies for the long haul.
Yeah. Yeah. And in a way that's not like, because I've heard this in universities, like we have fiduciary responsibility, very important concept, but maybe not restricted to risk and return. Maybe there's something more to it. And all of a sudden, like GASB, the Governmental Accounting Standards Board, did this fantastic white paper right around the time of the financial crash. And it was basically outlining why governmental and accounting principles for governmental and private entities should be different, right? There's different rationales. So you have also that at your disposal, potentially regulatory frameworks that could step in. And I thought it was a brilliant thing. It was like I was doing 18th century history at the time and I read this and it's like, wow, this is like just like something out of the Enlightenment. It's a clear statement of principles and, governments have longer spheres of existence. They basically they deal with taxpayer money, so they have to have a different kind of orientation towards the public good. So there's all of these things, and it was kind of funny because during this period you hear universities starting to say that they have to think in the long term, like it's almost like they're states, like they're independent fiefdoms. And that used to be something that was true of governments. Yes, we exist in the long term. This is for the citizens' good. But now it's like this almost a kind of habit of mind for universities to think in those terms, but not to really be able to communicate to anybody what that long-term existence is other than the mere fact of existence. Like, so that's not enough. But you hear it a lot. And it's kind of one of those tics of speech. It's coming from somewhere. Like somebody's like they go to meetings and they have these and they're basically, yes, we're long-term institutions and this is what we're going to say when people challenge our, if they challenge what we're doing, that we have the long-term good of the institution in mind. But if you can't tell what that is, and if your faculty morale is going down the drain, if you're having lots of protests, if you're operating in a very challenging environment, and I don't want to underestimate that, 70% of appointments in academia right now are contingent. So it's a very fraught space. Yeah.
Mine. I was just pointing at myself, by the way. Yeah. Hi.
Yeah. I mean, so there are real concerns, and you can't put everything in the kitchen sink together on this, but I do think there's a sufficient momentum with this that maybe it could, help things break through a little bit more to important and general conversations that we haven't had, that are getting clouded by a lot of ideological stuff right now, on all sides. And I'd prefer, again, that not be the case for the sake of, the people who are getting an education now.
Yeah.
It's not about obedience, or it shouldn't be. And maybe I'm revealing some of my own tendencies here, but I don't think the point is like innovation, creation, not obedience.
Mm-hmm. Yeah, like the humanities scholar that you are. I feel like we could talk to you for hours. I look forward to talking to you again.
Oh, this has been great.
Yeah, like
Super fun.
Some very, very chewy things to think about for us and for our audience.
And likewise, I love talking with you because you both like shed light on aspects of these things that I don't see as clearly. So I'm very grateful for that. And, thanks so much for having me on. It's been a lot of fun.
Isn't it just such a privilege that we get to do this? Long distance high five, Kelly.
Yeah, thank you so much, Kelly. That was really fun.
Yeah.
Thanks for coming on.
Thank you both.
Really, I mean, every time I think about this podcast, I'm like, why aren't we doing more of these fucking podcasts?
I know. Well, we got heard. Just to finish off some of it. So for me, and there's a couple of thoughts that just rattle around my brain after a conversation like that, because I live on a campus, right? I'm an academic and I study investors, I study endowments. And first, let me just say that, I know I'm in an engineering school and people tell me that's why you don't live in the woke world, because you're in an engineering school. But I think from my experience is the hardest conversations I have is as an academic with people challenging my thinking. When you go to work at a university, at least where I go to work, people's job is to poke holes in your thinking.
Mm-hmm.
That's the job of your peers, of your peer reviews, of your students. Yes, you're there to challenge students, but they're there to ask you questions and to really try to understand what you're talking about. And sometimes it's hard.
Yeah.
I'm a venture capitalist. I'm a founder of companies. And sometimes I have sleepless nights in that world. But I can think of a few times in the past year where I came home from work feeling oh man, I need to really rethink this.
Mm-hmm.
And that's this little piece of academia that I don't think people appreciate when they go off so many do, that it's this safe space. Maybe there are safe spaces, but it's to facilitate really hard conversations. It's innovation happens best when you put guardrails around it. Well, hard conversations happen when you're in the boxing arena. You make some rules and then you beat each other up.
Yeah.
That's what my experience is. But then people will counter that and be like, oh, you don't know, if you were in a history department, it'd be totally different. I'm like, okay, maybe that's true, but I'm not in a history department. I'm in a engineering school. So
yeah, I think that, it's first of all, I just love, when retail investors are asking me questions about pensions and how to get involved in activism there, that is just the kind of stuff that 5 years ago Sloane would have not dreamed of, right?
Yeah.
And any engagement has to be good, right? Like like even in the instance where it leads to a retrenchment, like just the building of that musculature, we're thinking about getting a little bit more activist in our approach to shareholder engagement at Ethical Capital right now, which is more to come on that. But
Sweet.
pretty cool.
Pretty cute. Yeah.
But like the second you start to think about that, you become aware of the musculature that exists already and has existed for decades among these, folks like Andy Bahar, who we had on the podcast.
I was gonna
a while
say
ago.
Andy Bahar, like that. It's so funny when we had him on. I was like, oh, beep, boop, 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 like pretty interested. And now, like years later, people are like, "You had Andy Bahar on your podcast?"
Oh, really? Yeah. I mean,
Yeah.
actually, someone just reached out asking if we want to have him on again. Maybe we should.
Maybe we should, because this is a moment where, people are really trying to figure out how to vote proxies and drive change. And really,
Yep.
like, there isn't a lot of good research out there. And, his outfit, know your,
you sow.
As you sow. That's it. Yeah. Sorry. As you sow is like one of the few that is really doing great work.
Yeah,
Anyway.
like they're out in every, pick up, Berkshire Hathaway's proxy statement, and like they're in there with CalPERS, filing resolution after resolution tirelessly.
Yeah. Cool.
And it's thankless work, like they're getting 20% of the vote every time, and like, getting stonewalled and just coming right back.
Yeah.
And that's the reality of pushing for change in any context.
So is that your hard thing, Sloane? Transitioning, segueing?
Oh gosh, yeah, great segment transition. I'd say that that is actually my biggest source of joy right now. Is interacting with that. I'd say the hard thing, so we have been forever at my firm trying to figure out how to get other advisors to use our strategies, right? We have a lot of interest in it. The hard thing we're dealing with right now is like the musculature is either pay for play, right? Where you have to like pay some platform more money than we spend on research to like get a berth in their store, or it's like an afterthought. And, like we literally have probably 2 to 3 times our assets under management right now waiting to cut a ticket, in order to get, because they're not like provisioned for something at Schwab. And like given that impact is so defined by size, in that world of engagement, right? Like you can, and I intend to have an impact with our, whatever we have, but, you get listened to based on how big you are. And it just like these real practical limitations on scale are just like so obnoxious to bump up against again and again and again. What about you? What's hard for you?
It's funny. The scale thing triggered my thought. I was going to say just getting old, because it sucks. But let's think more
Remembering
positively.
to get a haircut. Yeah.
I get, me, annual haircut. So I'm about
you get the wife busts out the bowl, does you at the kitchen table.
Yeah. I do my annual haircut. I haven't had it in about 6 months, so it's looking big, but it's going to get bigger. Sloan.
I wouldn't expect it. Yeah, I would be disappointed if not. I mean, like you show up with hair gel in, and I'm worried.
Oh man, they used to call me Prudential Ash in college because I did an internship at Prudential, and I didn't know how to be an adult, and so I got like a bunch of gel, and I put a great part in the side of my head, and I did that for a summer, and I looked like an absolute lunatic, like I was gonna murder people.
My gosh.
Yeah.
Oh my gosh. Yeah. I mean, hey, I too, in my early iterations in finance, had some regrettable fashion choices.
Oh my God. The suits I had, I wish I kept them. Oh, I had a double-breasted gosh darn suit. It was so horrible. I don't know what I was thinking. I also had a brown suit.
Oh, wow.
My God, it was mind-blowing. But anyway, my hard thing is explaining to people how big investment technology is going to get. So I've spent my life trying to build these invest tech companies. And I'm like, look, I don't know if you heard of this thing called alternative investment industry. It's like more billionaires in this industry than in technology. And we're bringing technology to this industry. But then people are like, yeah, but is it, just don't know the TAM. Like, you know, and how hard is it to sell? And you're like, yeah, it's hard. Like pension funds are hard to sell to. Trust me. So are every asset manager that live in spreadsheets and Word documents and, you know, basically make decisions via text message. But like, that's all going to change. Like I'm convinced, 101% beyond convinced that like 10 years from now, our industry is transformed through generative AI, RAG, ML, all of it. But I still find it very hard to get past that initial interest into that next phase of like building, growing companies. So that's a hard thing for me. Just
that makes a lot of sense. Yeah, like because it's like the I mean, you talk to like, I mean, like for me, it's like I spent so much of my time focused on process and focused on the governance of the process, and like there are obvious shortcomings, and I feel like we do it well. You know, and it's so obvious how we could. I mean, even just using Voss's like data, like we use data now when we're reading K's and Q's. You know, the friends and family discount.
Nice.
But like the, you know, just even bringing that into the conversation when we're looking at a K, and like having my attention drawn to the, like some random schedule that I wouldn't have seen if I was
100%.
You know, like it's obvious, you know, and like that gets to one of the interesting pieces of research I saw recently is that very few portfolio managers are using decision aids in any kind of way. Right. Like it's gut feel, it's, you know, like science, it's art basically, you know, and we use a rudimentary one that just helps me do portfolio weightings. But like even that thing, which is literally arithmetic, like winds up prompting so much thought. How could you not believe that there's layers and layers and layers to build on that? And given the value of the decisions that are made, like, wow, it's a big opportunity. But yeah, like it's definitely not SaaS, and that's where people have made money. And so if people understand you as a VC, they're always going to be comparing you to, you know, like consumer or regular enterprise SaaS.
Yeah, that's right.
You know,
it's hard, but it's going to happen. And one of the things that I often tell people, like I'm using deception and truth analysis too on documents that are submitted to me. And we even run our own memos to see if we're deceiving ourselves.
I should do that.
But like the ability to unlock the analysis of text through all of the generative AI, natural language processing, that's coming. But beyond that, there are people that are like decomposing what we do as investors, from like strategy to implementation, origination, you name it, like closing transactions, negotiating, like all of these can be decomposed into parts, and those parts you can build AI agents around. It doesn't mean they're going to replace you yet, but it does mean you're going to actually have these really interesting co-pilots, like hundreds of them for different things. Now, eventually, maybe they all might roll up into a single co-pilot, but you know, it's a fun moment. Is another way of saying it. So maybe my hard thing is actually a fun thing.
Many such cases. You know, which is yet another amazing segue to.
Oh. Yeah. I missed
it's like
that.
It's like taking your ski boots off.
Oh, it is. Oof. It's like getting into the hot tub, you know?
And this is, you know, for the uninitiated, that's the Dear Ashby horn, which signals the beginning of the Dear Ashby segment of the show. Second to last, probably the biggest in most of your hearts. I'm sure you've all been gutting it through the first hour of the podcast to make it to here.
Oh yeah, if you made it here, just feel like you need a free mug or something.
Yeah, or some free money. But
send us your bank account and we will take some money and put it back in there. Something like that.
You know, as a regulated investment advisor, I have to note that please do not send me your bank account.
Yeah, don't do that. I'm sorry. That's a bad joke.
I mean, it's a good joke, but you know, so if you have questions out there about anything, and you'll see in this segment, you know, that there are so many things that you could ask us, about all sorts of things, and these are all real questions that listeners have sent in. freemoneypod@gmail.com, freemoneypodcast.com. Just, or find me or Ashby somehow. And send
We
us
may
questions.
be experts in certain topics that you could talk to us about.
Isn't that fucking terrifying?
Yeah. Yeah, it is. I know.
So the first one is about your little, you did a little thing at CalPERS recently.
I did. Yeah. Our fellowship.
Maybe so the question is, how are you planning to tame the expectation of the Stanford GSB and engineering students who see their peers go into private equity and startups when you're kind of setting them up with a CalPERS salary?
Yeah, so we got right to the core of the issue. And part of the reason we're hiring them at Stanford is to get past the compensation levels at traditional pensions. So as a reminder, this is the Long-Term Investor Fellowship. We're modeling it on Teach for America. Instead of placing these remarkable human beings at public schools for a year or two, we're going to place them at public pensions for a year or two. In this case, we had to unravel that talent issue where a lot of people are getting sucked into the investment banking analyst programs. In fact, if you do a little bit of digging, you realize that anybody who wants to be an investor as an undergrad, their path tends to be off to Wall Street investment banking analyst program. It's seen as part of the apprenticeship. Then you go and you do an MBA, then you do private equity, then eventually you're an investor, right? That's the path. So long-winded way of saying, we went through Stanford and we figured out that the base salary at an average investment banking job today, not including the bonus, the base salary is about $120K. And that's what we're going to pay them.
That's so innovative,
isn't it? I know.
Paying,
in fact,
you're mitigating it by paying market.
Yeah. So we're just going to pay them what they would have made. And in terms of a bonus, here's what the bonus is: they get to work with me. How fun is that?
I mean, that's $200,000 in cash value.
I mean,
right
they
there.
could look. I'm, who knows what I could do for these kids? It's going to be awesome. But we selected our first 4, and we are pretty excited about them. We had one defer a year. She's at Oxford. And it was so fun. I did my interview with her as she was doing field work, studying the sovereign wealth fund in Rwanda. And then, and that just gives you a flavor for the caliber of students. We had two coming from Harvard, one of which was speaking of ping pong, a national ping pong player, chess champion, majored in math at Harvard. The other one worked at the White House.
It's so terrifying how talented people are.
Oh my God, dude. Oh my, I don't understand this young world. We got this kid from Princeton who was I took 2 years off to go pursue my dream of being a pro hockey player. Then I came back to finish my degree. I was in Europe. Now I'm going to, and then we got a kid from Yale. So those are the first 4. But the dream is
real diversity of institutions.
I know there. I blew it with that part. we in our final 8, we had a final 8, and we had a very diverse set of institutions. Chicago, Stanford, Georgetown.
It's it's like the line about skiing at Deer Valley. It's the most diverse ski resort ever. You've got the asset management industry.
Yeah, I know,
you've got private equity, hedge funds. Yeah.
Look, we were just when we saw. Okay, so I acknowledge that it's we didn't really do our.
Well, it's the first year, and Teach for America started that way too.
And it's these kids are at those schools for a reason.
Yeah,
they're nuts.
Yeah,
you read their CVs and the references they're getting, and you're like, how do you not hire this kid?
Yeah, Morgan Freeman is your reference? What?
Exactly. Literally, a couple of them were sending me references from professors that I genuinely look up to, and so then you're like, oh shit, this is pretty nuts.
Yeah, right.
Yeah,
whatever.
Right.
I mean, yeah.
Anyway, so we're gonna pay them the same. That's the answer to the question.
Nice. Well, and is there a website that people can go who are interested in applying for next year?
Yeah, next year. So our website, longterminvesting.stanford.edu. There's a tab that's called Fellowship, and based on this year's cohort of students, I would expect we could have placed 12 of the 100 or so applications with no effect on the outcome for Stanford. Sorry, for Stanford or CalPERS, right?
Wow.
Like they're just so talented. They're just so. What I realized is there's this pent up demand to go work for mission driven investors, and there's no pipeline.
Yep.
We have invented the pipeline. Now I need other off takers for this pipeline. I need pensions to show up and say, hey, we want some of these amazing students. So if you're out there and you want some killer students, come talk to me.
And it's pensions. It can be an endowment. It could be
asset owners. So I'm not going to help people go work at Goldman Sachs. But I'm happy, I'm happy to get, if you work at an insurance company, I might talk to you. If you work at a sovereign fund, a foundation, an endowment, it's conceivable I'd talk to you if you were a family office, because many family offices end up as foundations. So
cool. Well, that's a very substantive answer. And, here's another very substantive question.
Let's do it.
So what's the best management consulting style interview question, and why is it how many public company CEOs or board members currently have worms in their brains?
I barely understand the worms in brains. And when I look it up, it's like the RFK or whatever, the Kennedy dude had worms in his brains. Is that what it's related to?
Well, yeah. So I think that's what inspired it. But so I was like doing some digging on this, and it turns out, I think the stat is a third of the planet has a long-term toxoplasmosis infection. Oh
my God. We've got some rider in our body that's just hanging on.
Yeah, exactly.
Okay.
And the like fauna in our gut and whatever is still a very underexplored terrain, but like,
true.
So you go, okay, from a third of people, like, that's like what, 250 to like 200 in the S&P 500 or something like that.
Oh, wow.
Have some kind of, and it's interesting. I was thinking about this after I got my concussion skiing. Like, is this a disclosable event? Right? Because the cognitive capacity of your investment manager is certainly interesting to people. And it's not like I was permanently impaired or anything like that. But it just sort of like, it's a weird world out there.
It is.
I'm not going to work through the whole like McKinsey style, well, there's this many this and this many that.
The one that, jumped out at me that I don't like I don't ask these questions, by the way. But the one that I remember having to think through was somebody asked me, how many ping pong balls could you fit in a 747? And obviously, like, they want you to like just start making assumptions and then extrapolate, right? And that's fine. That, as investors, by the way, like our whole life is like, hey, is this assumption realistic? And like, what does it imply in terms of a future scenario?
If this is true, what else is true?
Yeah, exactly. Like, what are the correlations between these things? Like, is there a correlation between whatever business class seats and economy seats versus ping pong ball distribution? I don't know what it is, but I remember that's what they were hoping I would do.
The ping pong ball arbitrage. Yeah. And, I don't ask these kinds of questions either, but because like, there's a great example. A friend of mine was interviewing for a management consulting firm. She's from India. They asked her how many fire hydrants are in New York City. And she didn't know what a fire hydrant was because they called them something different.
Hilarious.
Anyway, so last question, I think, is the political issue of our time.
This is very serious because I know there was a video on this. I'm trying to get real for a second.
Yeah. So when it comes to the question of orcas versus yachts, how do you shake out?
Based on the evidence that I saw on my YouTube shorts recently, the orcas win.
Yeah.
Okay. Because that was nutso. I don't know if you have the listeners out there haven't seen this. Massive whale come out of the water and land on a yacht, but it's in there. It's in the web.
Yeah, and they keep doing it. They keep going after yachts.
Oh my God, that's not just a one-off?
No. This is a trend. This is like a real thing. I have to ask. We've got some clients who are yachties.
No idea it was a trend.
Yeah, no, it's like, I kind of want to believe that this is like, the biosphere pushing back on income inequality or whatever.
Oh my God, this will go down as the beginning of the undersea creatures trying to take back the earth. Don't you think? This is like a beginning of a science fiction movie, but in real life?
Yeah. It's, I'm feeling really safe here in Utah, being hundreds of miles from the closest body of water.
That's fair.
Yeah, you're in trouble, bro.
I'm in deep.
Yeah. And speaking of deep, we got the last segment here, which is easily. I mean, I know that I said the last one was the most important. This one really is. What do you got for me in the garden department?
I think last time I was talking to you about mulch. And I just want to give you an update on my mulch situation and maybe get a tip from you, Sloane.
Oh yeah.
Because
yeah.
I will admit that I put I think it's called Merlin's Beard, my mulch.
Mhm.
It's like the fuzzy one. We live way up in the mountains here, so we've got space. So I put, I don't know, half an acre of mulch out. It was a huge investment of time and effort. And then, I went outside maybe 3 weeks ago to like just marvel in my lack of weeds.
Mm-hmm.
And I could not marvel in my lack of weeds because there were weeds everywhere. And I ended up having to do so much gosh darn weeding.
Oh, man.
I probably had to do 6 hours of weeding because I had left it thinking this mulch is going to prevent the sun from growing this stuff. Anyway, I just want a tip from you. Like my tip is don't trust your mulch.
Did you put cardboard down first?
No, I just put mulch down.
There you go.
Oh, so wait, you have to put cardboard and then mulch?
That's what I did. So like I went to our local state liquor store and just was like, hey, do you have any extra boxes? I like selected 4 ones that didn't have a bunch of plastic crap in them. And then I soaked the boxes to remove all the tape and cut them up. And that killed a lot of our lawn and has been pretty good at inhibiting weeds. Sometimes you have to come back and do another layer of cardboard. But like that I would rake that to the side and put some cardboard down.
That's smart. I'll do that.
My tip is more of a brag.
Oh,
I'm gonna turn my camera around and show my wildlife pond.
Holy cow, I can see it. It's like a terrarium in your backyard almost.
It's still a work in progress, but it is, first of all, it's right to the right of my monitor. So mental health is way on the upswing around here. And the sound of rushing water is just so great.
Wait, how is it? That's my dream to have my own little river. What are you talking about? I thought it was just a pond.
Oh, well, it's got a pump that recirculates the water and kind of looks like a little stream.
Oh.
Yeah, it's incredible. And the thing so basically what everyone says is that if you want to, like, I identify as a wildlife gardener, as longtime listeners, and and like, so the big, value that I'm trying to provide is habitat and ecosystem services, right? Mm-hmm. Water is number one.
Totally.
And if you provide like a nice thing with like sloping sides, it's amazing how many birds we get now.
Yeah, it's
like,
rad, I bet.
I woke up this morning, like about to rush into my meeting, and then I just like stopped on the stairs and felt like Cinderella for a minute. There was like a bird I'd never seen out there, and just like hanging out, bathing, having a great time, and like apparently we're gonna get frogs at some point.
I think they're louder than you'll want. Just so you know. But anyway, I'm not gonna lead the witness on the froggies, but they get to be pretty croaky.
Yeah.
Not chirpy.
I think they're cute though.
They are cute. Depending on how many you get back there.
And which ones you get. I mean, the bullfrogs are invasive, and so who knows?
That's fun. But, I mean, it's part of an ecosystem back there that you're creating. It's great.
Exactly.
Have you thought about putting some koi in that pond or anything like that?
I have. Yeah. I mean, like I intentionally built it deep enough so you need to be about 3 feet deep in order to have year-round stuff in there.
Okay.
Right. So, and honestly, this is a pretty simple process. You dig a hole, you buy a liner, and then you put rocks down.
Yeah.
So I'm thinking about introducing some fish. Plants are going to be first, because right now, if you don't have plants, if you don't have anything in there, you just get algae.
Yeah, I was gonna say you got to also watch out for the skeeters.
Yep. Well, if it's running, that's less of a problem.
Well, that was the thing. If you've got the movement, then you don't need to worry about that.
If you don't just have I had I forget the guest we had who ran Harvesting Farmers Network, but I had a vat of the thing that he recommended going in our garden, and it became like a fly orgy pretty quickly. But running water, and what you can do is get these little surfaces that function as filters, and little stuff lives in there.
It's awesome.
Anything. But yeah, build your pond, man. You got to do it.
I'm going to do it. I mean, we have quite a steep hill that you can't really do much on because we're up in, like I said, in the mountains here. And I've always fantasized about having kind of like a little creek going down with like a coffee table halfway, maybe with like a faux waterfall.
I'm gonna send you a really calming YouTube channel about.
Please
this.
send me this channel because at some point I'll, between a year to 10 years, I'll save up enough money, just with the royalty, the residuals from this podcast, and I will.
Yeah, we actually so by moving to Substack, I turned on this thing that lets people pledge subscriptions. Which, if you're listening, you have other ways to support us. You can also, pledge a subscription. You can leave us a podcast.
Oh, really?
But we have something like 15 people have signed up to pay $100 a year for free money.
You're kidding me.
I think that some of them are people who think that we're actually just going to give them money.
There's no way.
Yeah, I'm not shitting you. It's the strangest thing. Like I woke up like the other day and I logged into Substack and I'm like, we have 800 fucking subscribers. All this, like, where did that happen?
Yeah.
What's going on? Anyway,
we're 200 away from not being able to do our joke of tens of subscribers. We're going to end up in being too real, and we might have to actually prepare more. Or maybe that's our shtick. We don't prepare.
That and terrible marketing and platform choices that impede our podcast growth, I think are
we just really raise the hurdles to get people engaged in this pod. But we love them. We love our listeners for that reason.
We love you all so much, and bye.
Bye.
Let's see. Oh, wait, no. How do I turn this recording?
I'm looking like money. Now make it rain on 'em.